Hi, this is Jeff Bish. I've been a trader for over 20 years, and as co-founder of MarketGauge.com, I hope that by sharing my insights about trading and the markets, I can help you reach your trading goals. In this video, I'm going to talk about volume, probably the first thing every trader should know about volume. And it is a basic answer to the question a lot of traders want to know, which is, how do I know if there's institutional buying? How do I know if the big guys are buying or selling? Well, this is a partial answer to that, and it's also an answer to the question of how much volume really matters. So I'm going to look at it on a daily basis, and I'm sure I'll do more videos on volume, and this is really a great place to start. First of all, is volume bullish or bearish, and what should I really be looking for in volume? Looking at a daily chart, you want to look for unusual volume. Now, unusual volume means that it's trading a lot more than what's normal. Not just a little bit more, but a lot more. Without having to worry about the nuances of volume, you want to focus on the volume patterns that are just blatantly huge. Now, if you take that one step further, and so what I mean by blatantly huge is, if you look at the chart, look at your biggest volume bars. Okay? Those big volume bars are created by big institutions. They're created by players who are taking a position probably for a much longer term, and they may not even have their entire position built yet, which means big volume areas tend to attract more volume and tend to become really important areas of support and resistance. Now, my volume charts here happen to be colored green if the market goes up on that volume and red if the market goes down on that volume. That's actually not as important to me as what the market does after the big volume. In fact, we've done extensive courses on concepts similar to this, and I'm going to sum it up in just a few minutes. So there's definitely a lot more to it, but this is where you should start. If you take a big volume day and just draw some lines at the high and the low, what you'll find is that the direction the market takes after that big volume area is really how you should be looking at that volume day. Was it an accumulation day or was it a distribution day? Did the buyers win or did the sellers win? And so in the case, if I just look at Amazon, I can see that this big volume day right here corresponded with the low, but really you consolidated for a couple days after it, and it was not until you took out that volume bar that you really knew which way that volume was going to go. I'll also point out that when you came back down to that level, you held for quite a bit, and in fact you couldn't really get much below it once you got below it, and once you got back above it, the stock was strong. Next big volume bar right here, and again, once we moved above it, you had a bullish bias, and if I draw the line at the bottom, where does the market ultimately come back and hold? Let's look at the next big volume bar. Incredibly bullish looking breakout, but the truth of the matter is that it consolidated after that, and once it took out that volume bar low, it was down. Granted, the market's bias has been pretty strongly down during this time as well, but the big volume represents, remember, there's a lot of people who took a vested interest in that stock at that price. That price is going to remain important, and the only participants that could create volume bars this big are the institutions. So by looking at volume this way, you're finding good support, you're following what the institutions are thinking, and it's not that hard to do. Let's just take a look at another stock. Okay, IBM. I'll do this one a little more quickly. Just want to take a look at the big volume bars. Here we go. Hopefully you can see the patterns that I'm pointing out. Now you can use this in your day trading and your swing trading. This bar is actually this one right here. I'm not saying that just because it's got big volume it's going to go up. That happened to be the case in so far. But let's take this one. You want to be careful it gets below it, right? Here's another big one. Try to get above it a little bit, but once you couldn't, it sold off. Notice that it actually spent a couple days trying to hold this level before the market just brought it down. Okay, now we've got big volume bars in here. Notice how when the market rallied back up, it stops at the top of the volume bar. Okay, and just yesterday we've now got another really important big volume bar. So I know it seems simplistic, but it's incredibly powerful, and the reason it's powerful is because you're tracking what the institutional players are doing. Now fortunately, it's just as simplistic to find these days with probably a number of different tools, but one of the best is our hot scans product. And the reason it's one of the best is because if I just click on big volume, I've got the scan that would have found any one of those big volume bars. And the reason I'm saying that is because when we look at volume, if you look at the volume chart, the volume bars, we're looking at the whole day versus average. Remember what I said, the important thing is to find the volume that is greater than what is normal, not just a lot of volume. You know, the fact that Cisco or IBM or Microsoft or even Apple trades 5 million or 10 million shares a day is not what you're concerned with. You're concerned with a situation where the stock has traded significantly more than average. So if a stock's average volume is 1 million shares a day and today it trades 10 million, that's significantly more important than a stock that has normally trades 7 or 8 million and today it trades 10 million. Both are trading better than average, but the first one is trading 10 times more than average. So our gauge here enables you to see the percent over the average that the stock is trading. But it goes one step further. I'm looking at this particular chart at 10:30 in real time. This calculation is telling me that HPQ, adjusted for the time of day, is trading 1,000 times greater than average volume. So if it stays at the same pace that it's on, at the end of the day it will trade 1,000 times greater than average volume. So that enables me to see during the day which stocks are potentially setting up to have this huge volume bar. Now that's helpful for the day trader during the day to find out where the volume is during the day. It's helpful for even the end of day analysis for being able to find the stocks that closed with that type of volume, even that maintained it during the day. So just as a quick review, you want to find stocks that have truly extraordinary volume, and you want to find those big volume bars and follow the direction that it goes next. Don't assume that just because on the particular day that you got the volume, the market was up, that it's going to continue to go up, or down, it's going to continue to go down. Okay, common misperception of traders and a huge disservice to the analysis of volume. So I hope that helps. Well, that concludes this lesson. Thank you for watching this video. I hope it helps in your trading. I've kept it short because I believe that if you focus on the nuances of trading price and volume patterns one at a time, you're more likely to absorb it, apply it, and therefore benefit from it. Would you like more? Did you know that this video is only one of a 10-part series that you can get for free? In this series, it will cover various topics that will help you better understand the markets and find great trade setups. If you'd like to receive all 10 videos, simply go to www.marketgauge.com/HS videos. I look forward to sharing the next video with you.